Welcome back, fellow value investors. In this video, I'm going to be covering Caretrust, which is a real estate investment trust. It's been a good investment for me to have for many years. This company provides housing for the elderly, and it's combined with some healthcare. As many of you know, the United States has a population of many people above the age of 65, and many of these people need a place to live where they can get their healthcare. And Caretrust has been growing. They continue to add properties. They're profitable. They pay a really nice dividend. They announced their earnings less than 2 weeks ago. So I have a new set of financials for the third quarter that ended. And I can take a look at those financials and value the company and value where I think this company ought to be priced and compare it to the current price. I'll then make a decision whether I should buy more shares in Caretrust, hold my shares, or sell my shares in this particular REIT. Before I jump into my video, please do me a favor and like my video, subscribe, and please add comments. Let me know what you think of Caretrust. Over time, I've developed a process of evaluating real estate investment trust. They're a little different than regular companies, so I treat them a little differently. First, it's all about the company. No matter what the investment, I need to understand and believe in that company. And I need to believe in that industry. And I need to know that the management team is doing a good job operating that company. I need to know that the dividend payout ratio is less than 80%. And we compare that, the dividend, against funds from operations. Last, I want a discount on stock. I'm a value investor. I need to buy when it's discounted. I don't buy at a premium. There are a lot of great companies that are being sold at a premium. That's somebody else's investment. I'm a value investor and I need a discount. And based on the answers to those questions, I will buy, hold, or sell. So within real estate, a fast growing area is housing for the elderly, and specifically housing that combines medical care. And that growth is really driving strong demand. And it's really giving Caretrust a tailwind to continue to buy and develop additional properties. So I think they're going to continue to grow because the demand just keeps going up and up. Overall, I really like this space. The elderly usually have benefits that they get from Medicare. They also have their life savings, and they want to live comfortably. And their loved ones want them to be comfortable. They've certainly earned that during their lifetime, and they can live somewhere comfortably and somewhere nice. So all those things are delivered by Caretrust. So I think they're delivering something really good to the market. Their management team is excellent. The management team, really understands this space, understands real estate. So overall, I like the company, I like the industry, and I like the management team. Let's take a look at their financials. The revenue's been going up. In the third quarter, that was the most recent quarter that was closed, revenues are up about 10%. And year to date, they're up very nicely, about 10%. This is a real estate investment trust, so it's not expected that they grow this quickly, but it's certainly a really good factor to see. Over the last 5 years, they've gone from 157 million up to 196 million. So their revenue's been really picking up, and it looks like they're going to do well again in 2023 and continue that upward trajectory of revenue. I really like seeing that. It shows that the business is doing a good job. They continue to accumulate more customers and continue to grow their revenues. The market appreciates them, so it's a very good sign. Last thing I'll touch on is they were profitable in the quarter, a very good profitable quarter, and they generated good funds from operations. So Caretrust, this particular stock, is in my income portfolio, and one of the main reasons I invest in this REIT is to get that dividend, and that dividend really provides the solid income that I'm looking for out of this investment. And the important factor is, can they continue to pay the dividend? And from my calculations, they're at 80%, which is acceptable. And you get there by looking at the quarterly dividend, which is 28 cents, and then dividing it by the funds from operations per share, which is 35 cents. And that's how I got to the 80%. And Caretrust provided all that data in their financials, in their calculations of funds from operations. On most of the companies that I evaluate, I like comparing debt to EBITDA. And I don't do that for REITs because REITs usually depend on a lot of debt because they own a lot of real estate. And to me, it's fine that they're above 3, which is usually the ratio I use on normal companies, because they're holding so much real estate. Real estate tends to be a very valuable asset. But Caretrust has managed to get their ratio under 3, which is very impressive for a REIT. So I just wanted to point that out, that their balance sheet's in very good health and really setting them up to be to continue to grow because they have a very strong balance sheet. Now let me look at the statement of cash flows. Cash flows have been increasing the first 9 months of 2022 compared to the first 9 months of 2023. Cash from operations did go up about $2 million. Very good to see. They don't have to put too much money into the business, but they did increase the amount of investment they made in their current properties. You also see in their investing section of the cash flows that they're acquiring another property. Very good to see that. I would expect that revenues in 2024 are going to be higher. And once that property becomes rented out and operating well, cash flows will also increase. So it's good to see that, yes, they generate really good cash, and the prospects for 2024, 2025 look really positive. So I believe this stock for Caretrust is currently being sold at an 8% premium. And I get to that conclusion by valuing the company using two methods. With a REIT, I value a company by discounting the dividend and also discounting earnings per share. Let's take a look at the dividend first. So I take the dividend rate and I discount it based on how I believe it's going to grow and a discount rate, which I'll use using current market conditions. And I look at that valuation and I get a stock value of $22.40 based on the dividend. But the stock is being sold at $22.95. So it's actually being sold at a 2% premium if we value the company using the dividend. Earnings per share for the next 4 quarters, I expect is going to be $1.05. I'm going to use a PE of 24, which is good for a REIT, especially one that is growing like Caretrust. I'm going to go with a growth rate of 3%, and I'm going to use this formula to discount all the earnings per share I expect in the future to get to a value of the stock price of $19.95. Stock's being sold at $22.95. So there's actually a premium of 13%. So overall, I average the two and get to 8% premium on this stock. Looking at where the stock price has been over the last 12 months, you can see that it's really had a nice rise in 2023. It's actually up 22.5% year to date, and it pays that 4.8% dividend. So if you combine the two, it's more than 27% return on a REIT, which is excellent. You also see that you have some low points. So, Caretrust offered really good acquisition prices for a value investor like myself that's looking for a discount, but it's currently being priced at a premium. It's time to make a decision whether I should buy, hold, or sell Caretrust. First, I think the company is great, and I think the management team is great, and I really like the industry. Very good. Payout ratio of their dividend compared to funds from operation is at 80, which qualifies for the less than 80%. They don't offer a discount. They're being sold at a premium. And it's understandable. As I showed, the stock has risen in 2023. A lot of investors are seeing quality in Caretrust, which is good. I have a pretty good sized position in Caretrust, so it's good that the stock is appreciating. But at this time, I'm just going to hold my shares in Caretrust. It's a quality company. And an 8% premium isn't too overdone. If it was at 48% premium, I'd be selling, because I'm a value investor when I buy and I'm a value investor when I sell. If it's priced way too high and I cannot substantiate that valuation or that price, I sell and I wait for the stock price to come down and then I rebuy. That's my video on Caretrust. I hope you found it interesting. Do me a favor and like my video and subscribe to my channel, and please leave comments on Caretrust. Thanks again for watching.